Come on. You can hear me, but now you got to be able to see me. Hopefully. There. Now can you see me? And can you hear me?
Yes, timing is perfect.
There we go.
Yes, can you hear us?
Yep, I can hear you now.
All righty, good deal. All righty, give me just a moment. I'm gonna give Lisa a copy of the audit here.
Okay.
You're welcome. All righty, I think, Mayor, if you're ready, I think we can proceed.
I'm ready. Tim, thank you for joining us.
No problem. No problem. Um, I'm fighting a little bit of cold, so if I start coughing, I apologize.
All
So I know Lorraine will go through this in more detail than I do. That's the way this normally works. She's more day to day than the audit process. So because I am somewhat technically challenged anymore, I hate to admit it. I could not get the board memo like I did for you guys last year to print correctly, and Karina was out of the office today, so I will be getting that for you, and I'll get a copy for Wonder too, so that she can put it in the file. But it's basically the same thing that I put together last year, which is a summary of the board presentation that I'm going to give you tonight. So
Tim?
yeah.
You froze up for about maybe 10, 15 seconds there, so we didn't hear that little bit what you just said.
Okay, so I have put together the memo like I did last year.
Okay.
I was just not able to get it to print right. So, and Karina was out today, so I will have her print that and get that over to you guys. And then I'll make sure that Wonder gets a copy of it too to put in the file.
Sounds good, thank you.
But essentially it's the same memo as last year, where it just describes what I'm going to talk to you about tonight. So as mentioned, Lorraine will go through this in more detail. Here's my highlights. I'm not necessarily going to flip through any of the pages in the audit. Lorraine may go ahead and do that. I'm just going to hit the points that I wanted to hit. You do receive a clean opinion for 2024. No issues that we ran through. Lorraine did have some adjustments for us. I don't think we had much in the way of adjustments that we proposed. Most of those came from your side. Everything is, I mean, all the funds are doing well. Sewer fund is or wastewater fund is the one that still owes a little bit of money between funds, but you did pay that down quite a bit. No funds have negative equity. Sewer did have negative equity last year, so that has now been recovered. My highlights are general fund equity did decrease again, 385,000 this year. So you went from about $1.6 million to about $1.035 million carryover. Of that amount, 250,000 is restricted because of prepayments at the end of the year, or most of it is your TABOR reserve that you have to set aside. This year, based on your total expenditures for 2024, your total carry forward is about 4 months or a little bit under 4 months. Last year's carry forward was a little under 6 months, so you dipped into your carry forward another couple months. Revenues were up quite a bit, but expenses were also up. Your total decrease this year, the 385 is about 212,000 more than the decrease the prior year. So your loss in general fund is a little bit more than what you've had in the past. Sales tax capital improvement. This is primarily capital project related. You did spend down your equity by 1.3 million. You have $1.8 million carry forward. Your total revenues were up 1.1 million. That is primarily related to state grants and sales and use taxes. And again, the expenditures is just based on the fact that you're doing capital projects. So it depends upon what capital projects you do from one year to the next. 1% street sales tax used about 250,000 of its carry forward. You have 1.2 million in there. The other smaller governmental funds, ramp and conservation trust, had minimal activity. Ramp, you have $675,000. Conservation trust, I don't think you actually had any expenditures in there. You had a year where you were setting money aside. Total carry forwards there is $123,000. For your proprietary funds, which is water, sewer, wastewater, and parking, our main thing that we look at is your net operating results, not necessarily the net income. We look primarily to see if your user charges are adequate enough to cover your user expenditures. Water fund, you had a net operating income of $181,000, so positive there. You also received all of the dedicated sales tax, or you put all of the dedicated sales tax, approximately $800,000 into the water fund last year. Because of the grants that you received and the sales tax, that is not a Tabor eligible fund or a Tabor enterprise fund, so you do have a Tabor emergency reserve there. Unrestricted fund balance or unrestricted net position, you did spend down. You are down to 1.1 million. I think you were about 7 million last year. That is primarily because you were doing large water capital projects last year. Sewer fund did have an operating loss of $73,000. Not necessarily that we'd like to have an operating loss, which means your user when we're trying to cover depreciation, you didn't quite cover your depreciation, but your depreciation, I think, is about $400,000 in there, if I remember correctly. So you are covering most of your depreciation, just not all of it. Overall, you do have positive net position this year as opposed to negative net position last year. You still owe $443,000 to, and you might have to help me, Lorraine, is it general fund or is it sales tax capital improvement?
Sales tax capital improvement.
Okay. But you did pay down over $1 million of that loan last year. So you're making good progress on getting that fund repaid and getting that money back into a fund that can use it. Parking fund, you had a net operating income of $608,000 because you have inflows without much in the way of outflows or non-capitalizable outflows. Your total carry forward there is $1 million. Overall, your system processes are working well. Our biggest thing this year, and we kind of hit most of our clients with this, is, and especially in your case, you haven't updated your internal control structure for a while, especially with the changes that you've had in staff. So we recommended that you start that process. You're in the process of tweaking and revising that to make sure your controls are working well. As far as issues that we ran across, nothing really. We had a couple minor issues related to some bank recs that we had to do, or some bank items on the bank rec that we needed you guys to look at. We had an email snafu where Lorraine sent an email on Monday and we still hadn't received it on Friday, so that kind of threw off our timing a little bit. You have one of your tower leases that you were getting more money than what we thought you did, and so we had to research why did we have a tower lease from why are we receiving so much money, which is a good thing. So we were trying to figure out what was up with that one, and I think we finally got that one straightened out. Our biggest thing is, and we're working on it on our side, and hopefully this will work on your side, is just getting this timing to work better. The process anymore just isn't flowing the way that we want it to. It's definitely not flowing the way that you guys want it to, as far as getting things out the door. What we're running into is we've got certain clients that are really good at getting us information, and then we have other clients that aren't so good at getting us information. And we've always operated with we're going to work on all of the audits at the same time and try and keep them moving. I have decided personally that is not working anymore for my clients or for me. So what we are going to try and do going forward, and it seems to be working fairly well with the fall work that we're doing this year, is we'll still schedule you for a certain week to do your audit, but for the most part, that's going to be the basic audit work. And then I'm going to follow along, and this will probably help Lorraine a little bit too. I'm going to follow along a little bit behind that, and I'm going to let my team go through and see what issues they've encountered. I'm going to then go through and review what they've done, do the higher level stuff that I need to do. And what I am doing this year or starting this fall is I'm doing an audit start to finish before I move on to the next one. I can't have multiple audits going at once. It's not fair to the clients. It's not fair to our process as far as everybody getting frazzled trying to get things out the door. So what we're going to do is we'll still schedule you for a given week. We're not necessarily going to be on site as much. We've been talking to our peer firms or fellow auditors, and they're not necessarily going out on site as much either. And I need a little bit of flexibility as far as instead of scheduling a particular week for me to be out there is I need to drop in when or get to the stuff that and coordinate, like in your case with Lorraine. So if, hey, the capital asset the capital asset email didn't get through, by the time I got the capital asset, had to start working on the next audit. That's not fair to you guys. So going forward is when Lorraine gets me the capital asset schedule, then I will be working on the capital asset schedule, and I'm not going to put down your audit until we have everything done. And I'm just going to go through that process one-on-one, and individually all the way through until all the audits are done. That way, as we get it done, we'll just get it out the door right then. None of this trying to wrap up a whole bunch of audits all at the end. I just want to get them all done as they go through. Now, the flip side of that, which is will not be a problem for you guys, is some of those clients that schedule their audit early and then never get us the information or are very slow at getting the information are going to pay the consequence for that. They are no longer going to get those front end slots. If they can't get us the information that I can get the audits done, then I'm going to make the choice of you're either going to have to wait and go on the back end, or you're going to have to find somebody else to do the audit. I've got to work on the clients that are actually ready to go, like you guys, just so we don't have to go round and round. Lorraine and I are working on one right now from December that has been a nightmare of getting us information. I've already decided. They've probably also already decided that we are not doing their audit next year. But they didn't even start getting us information until I had started my school audits. And I have told my schools that I'm going to be working on their stuff. So if they're going to wait until 8 months after the end of the year, 7 months after the end of the year to get us information, that's not going to work. So hopefully that process, as we roll it out next spring, will make your audit process go smoother. We want everybody to have less stress, and hopefully we are not delivering this in November. And I know part of the November was just because of your work session or your timing on your meetings. But I don't want to be doing this audit or wrapping up this audit last minute. Andy doesn't want to be doing this last minute. Lorraine's got plenty of stuff. Lorraine wants to go on vacation. So, but like I said, overall, everything is working well. Just a couple little minor issues that we encountered this year. Like I said, the biggest thing is just trying to get an actual internal control structure with the people that you have in place right now. And then you guys can work on it and make sure everything's working, that you've got the safeguards that you need so that Andy feels comfortable, so that internally you guys feel comfortable that everything is good, and that nobody can be accused of anything going wrong at all. So with that, if you have any questions for me, fire away. If not, I'll hand it over to Lorraine and let Lorraine go through the audit in detail.
All right, any questions for Tim?
Just a quick question, Tim.
Mhm.
Thank you for transparency. Was our audit due July 31st?
Yes.
Is that what was due? Because I wondered
Yes.
why it was late this year.
You cut off.
Do we normally get it in November? I
So,
thought the state was due July 31st.
We did get an extension this year. You can get a 3-month extension if you request it before the July 31st deadline. So that was requested and granted by the state. So the audit was submitted by the September 30th deadline. As Tim mentioned, it was just a scheduling challenge, trying to find a night that worked for him, a night that worked for us on one of our regular meeting nights for him to present the audit. Normally, we would do the presentation late August, September sometime, maybe the latest early October. So we're a little later in presenting it to council, but it was submitted to the state
Okay.
as required.
But that is what I'm trying to address, is not getting us put in that position again next year. I mean, it's just, it's too stressful for everybody, and it's not fair to you guys, and we've got to get that straightened out.
Okay, thank you.
Mhm.
Any further questions? Tim, thank you very much. Appreciate
All
all
right.
the hard work.
I will hang out in the background and listen in.
All right.
Hey, Lorraine, can I ask one question since it's your turn?
Thank you, Tim.
On these adjustments that he spoke of, did you see any trends? Were they in a certain fund? Were they in a certain transaction? We can identify them?
No trends spring to mind. I could look back if you would like me to.
No.
I-
If it didn't hit you the first time, I'm down, it's gonna hit you again. Okay, thank you.
No, there wasn't any trends. I mean, it was really minor stuff that we found. And it was just some cash disbursements. Now I can't get my camera to work. Cash disbursement, little tiny items, and I think it was, I can't remember if it was ACH things or not, but I mean, it may have totaled $10,000 in total. And it was just some things that I think got double posted and then needed to get reversed, or that had not gotten clean. Those double postings had not come back off.
Okay, thank you.
Well, I'll go ahead now and go through the audit with you a little bit. I usually say when I meet with the council at times like this to go through the audit that I do think that your duty to safeguard the assets of the city is one of the most important duties that you have as council members. And so my goal in going through the audit tonight is to get to a point where you feel like either you feel like you understand what's in here and you're satisfied with it and feel like you've satisfied that fiduciary responsibility to put this on your shelf, recycle it, or conversely, if you have additional questions or really want to dig into something that we cover tonight, then we can arrange to do that. So I'll start with the beginning of the book. The first thing that you see after the table of contents is the management's discussion and analysis. It's one person I can't see. And this is a required part of every financial statement. And this does give the reader the rundown and hopefully some meaning behind the numbers. And so I like to point out the financial highlights at the beginning. Those are useful to council members or staff. If somebody calls and says, hey, I saw that you were reviewing the financial statements from last year, how'd the year go? You can just say, oh, they were great. At the end of the year, we had $52 million and the net position increased by $3 million during 1 year. You can kind of rattle off those bullet points on the top of the small Roman numeral page 1. Your net position in the governmental activities decreased by a negligible amount in 24, mostly due to the depreciation of capital assets, so not due to spending. And then the net position of your business type activities went up almost 20% during the year. And a lot of that was due to extra sales taxes that you had relatively new sales taxes coming into these funds. And then you had a lot of federal and state grants that came in and operating income from the parking fund. So there were a number of reasons why your business type activities increased by 20%. Your governmental funds marked a decrease of about 3% from previous years. So we'll focus on those items as we go through this. This using the annual report tells you how there's different types of funds that you're required to report. And governments, unlike most businesses that have one bottom line, has several different bottom lines depending on what the restrictions are on the various revenue sources that are going into the city's coffers. And you've got two main types of funds here and a third small type. governmental funds, shown on Roman numeral 2, are the basic services that are funded essentially by taxes. These are things that governments do that business usually doesn't. And you aren't necessarily selling goods and services like a business does in order to have your general fund, to have your administration, to have your police department. Those are not financed by revenues that come from the users of those services. They are financed by taxes of the people that benefit from those services. Is, you know, you don't have to pay each time you drive down the street or each time you call for assistance. There are fuel fees for service, like pulling a building permit or something of that nature. But in general, your governmental funds are governmental in that the government has to do this or is the logical entity to do it. And it's taxes that support the operations that are in these funds. Proprietary funds are funds that do have services or goods that are sold in order to finance the operations of the fund. Here you have a certain type of proprietary funds that are called enterprise funds, and you have 3 of those, and they're run like a business and they are accounted for like a business, where you're looking at the whole capital plant that the water fund has, the whole capital plant that the sewer fund, the wastewater fund has, parking, how those are valued, what you would get for it if you ever decided to sell it, as opposed to the governmental funds, where generally you don't look at the value of the buildings and the streets and the parks because you're not going to be selling them. You're not relying on those assets to produce income for the operation of those funds. In the proprietary funds, the enterprise funds, you're relying on the plants and the pipes and the parking spaces and structures to provide what you're selling and getting the revenue for to support the operation. You have one fiduciary fund, and this is where it's really not the city's money, but you are the logical entity to track it, and that is your Hanson Cemetery Fund. You've said, okay, we will handle that for that cemetery. Moving on to the next page, you start to see some charts, and on the left is the Idaho Springs condensed net position for the past 2 years at the time this was written. And condensed net position is like the balance sheet for the city. And this is what you have amassed or what you owe as a result of all time since you became a city. So since the time Idaho Springs became a city, for your governmental activities, you have current assets of 6.4 million, non-current assets, which is the value of the streets and the buildings and the parks, of 37,000. You've got liabilities such as accounts payable, et cetera, and long-term debts, debt that you owe of 9 million. And you've got net position of 33 million. That's the leftmost column there. 33.4 million. The second column shows last year, the year before this, where you had essentially the same net position. You went down by about $100,000, less than that. The business type activities, again, you see the current and other assets, which is the cash and receivables. You see the non-current assets, which is the buildings and pipes in the ground. You see your liabilities, mostly for your long-term debt and loans for water and wastewater. And then you see your net position there. So this is where on the first bullet point, we showed that you have 52.3 million in net position at the end of the year, up from 49.3 the year before. Only in the front of the book here do we talk about those capital assets of the governmental fund types. That's not what you're looking at when you talk about certain aspects of the health. Those governmental funds are mostly looking at money in, money out, the flow of financial resources. Do you have enough in your fund balance, or as Tim calls it, you carry forward to keep operating if you have to? What's the flow of financial resources of money? The business type activities, which is those enterprise funds, you're looking at the flow of financial resources. So when you expand your wastewater plant, then you have a lot more valuable enterprise than you did before you did it. So that's the both economic resources discounted. In the front of the book here, just to give a bottom line number, those capital assets are added into the governmental activities, as is the long-term debt that'll be paid off over future years. Most of the city's net position, 43,000, is the second to the last column, 2024. The bottom section, net investment in capital assets, 43.8 million of the 52 million in total net position that's shown there is in capital assets, not spendable unless you were to start selling off buildings or parks. And that's pretty common, but you have a very large amount invested in capital here, which is a good thing because you can use that to attract visitors and to therefore get in the money on the financial resources side that comes in from those visitors. The next page, 4, small river number 4, is essentially the changes in net position, which is essentially the income statement for 1 year. So where I said page 3 is what you've amassed over all time, page 4 is just what happened during 2024 and 2023 that changed what you had amassed over all time. And so you'll see in the top section, if you look at the governmental activities, the bigger numbers there are in grants and also sales and use taxes. You don't have the bigger numbers in charges for services, the first line. But if you look at the business type activities, the charges for services is where the most of your revenue comes in. That's where you are selling things in order to finance the operations of your water, wastewater, and parking funds. And you have less in sales and use taxes, which is what's coming into the water and wastewater fund. That's unusual to have sales taxes go into those enterprise funds, but you have done that here. The expenditures by program are shown in the middle section: general government, public safety, public works, and again, water and wastewater and parking. So during the year, when you look down to the bottom 3 rows, you'll see the increase or decrease in net position each of those years. So for the governmental activities, there's a decrease of 80,000. Some of that was due to this transfer out, the amount right above that, the 525,000. That went over to the business type activities. Your sales tax, your street sales tax fund is allowed to be used for water and sewer pipes that are in those streets. And when that happens, that fund builds it and then it transfers that asset to the water and wastewater funds where they belong. So that's what those transfers are. Moving on to page 5, we've got some pie and bar charts. Governmental activities, as I mentioned, it's the flow of financial resources, money in, money out. If you read this pie chart, like it's a clock starting at noon, is the first item, charges for services, and then going clockwise around until you get to the big blue section on the left, that's sales and use taxes. The orange section after that is other taxes. So most of what you get in the governmental activities is tax-based, not charges for services. Down below, you see the program expenses, which means what the program generates. And expenses are, by and large, much higher than the revenues because they're tax-based. They aren't program revenues that pay for these things. On page 6, you've got the business type activities. And here, starting at noon on the pie chart, charges for services is the majority of the revenue coming into these funds, as you would expect. You also have capital grants, which are significant, and sales and use taxes, which are significant. Most governments have 0 from sales and use taxes, so the charges for services would be much, much larger. The bar chart down below, you see that here, revenues in the water fund, the red bar, are outpacing the water expenses. And in the wastewater, it's pretty close, but not quite covering the expenses with revenues. And in parking, your revenues are exceeding your current expenses as you build up some monies for future expansion. The next two pages I'll kind of skip over because these go independently through each of the major funds. And it's similar to what we talked about in the aggregate on the last few sections. But each of their major funds is talked about a little bit here. Your capital assets and debt administration, there's more information in the middle of the book. But at the bottom of page 8, if you're interested in seeing what did we spend all that capital on, that first section really talks about how much you did in capital during 2024. It was impressive. City completed improvements to the police station, Matty Dam, train shelter, powder house, railroad coach, Virginia Street, City Hall, the museum, the new public works facility, and the visitor center. And then began work on Virginia Canyon and Virginia Street water and sewer line improvements, Montane storage tank replacement, Highway 103 line improvements. Continued work on these other items, the recreation complex, play park, mobility hub, Virginia Canyon Mountain Park. So you really did have an impressive amount of activity and accomplishment in the area of capital improvements. I'm going to skip those next two pages, but there's a little more detail here about what those capital improvements started at. It shows you the land, the water rights, the construction by the various governmental types. And then it shows some, on the bottom of page 9 starts debt administration, a little synopsis of what your long-term debt was. And so on page 10, you see governmental activities had one main outstanding debt, and that's the 2018 street sales tax revenue bonds. Started the year with 8.8 million still owed. And you repaid out on schedule 250,000 and have a balance of 8.5 million. And in the next year, you'll have to pay 270,000 in principal. You're also paying interest as you go, and you're amortizing a bond premium each year. The accrued compensated absences that's at the bottom of that governmental activities and also the business type activities schedule of debt refers to the leave balances that employees have in their leave banks that would be payable if and when they were to leave employment with the city. Under the business type activities, you see there's a lot more outstanding debt. And some of this is, the balance is getting down fairly low, especially with the 2002 water note from the Colorado Water Conservation Board. But you've still got significant amounts of your $3 million debt issuances from the Colorado Water Resources and Power Development Authority notes for water, wastewater, and for water. Moving on to the next page. So that was the MD&A. So I'll be going faster from here forward, but that's the executive summary, so to speak. So I wanted to make sure you were aware of what was in there.
Right.
Yes.
As far as accrued compensation, is there any ratio that we should use as a rule of thumb?
No, and that is something we look at it, particularly this past year, because the GASB, the Governmental Accounting Standards Board, did adopt some new requirements as to how you determine what the current due within 1 year portion is. But it really just depends on your turnover and who leaves when and how strict you are with any carryover limits versus maybe sometimes you'll lift a limit and grant people carry over more because of certain reasons. So that it can change a lot from year to year.
And Lorraine, if you don't mind, just to point out, it varies so much from client to client as far as what is being offered, and it really is a employee retention and base by base as far as what you need to offer to basically to keep your employees. So there isn't any good standard to say this is what should be out there. We just see all sorts of variety on those, what you offer.
One of the things I know might be on your minds is what you can offer your employees, and offering different amounts of leave or different policies about how much leave you take with you when you leave. can be attractive things to consider. The next page is the auditor's letter, and it's standard. You know, there's a boilerplate here, but that second paragraph is what Tim led with, that in our opinion, the financial statements referred to above present fairly in all material respects the respective financial position of the governmental activities, the business type activities, each major fund, and the aggregate remaining fund information of the city for the year. So that's the clean opinion was referring to and what you always want to see. So we're glad that you keep getting that. Then moving on to page 4, these are called the, there's 2 statements here that are entity-wide statements where they try to show one bottom line for the whole city and still can't quite do it. As I mentioned earlier, there's governmental activities and business type activities. But this shows all the assets of every kind, including the capital assets for the governmental activities and business type activities on page 4. And that's what the condensed versions were that we looked at in the MD&A. And page 5 is the statement of activities. So what changed in 1 year. Condensed version was in the MD&A. We looked at where the revenues came in, et cetera. So this is the full-fledged statement. But we're going to turn to page 6, which is what you're used to seeing when we look at the financial statements for the city month by month. And this is the typical balance sheet that's shown in the typical way for governmental accounting without adding a lot of capital to the balance sheet for the governmental funds. So page 6 is just your governmental funds, not your enterprises. And it shows your assets and liabilities. And you'll note on here, it's not showing the capital assets on this page. That's normal governmental accounting, not entity-wide accounting, because these are your funds that are governmental. You're not measuring how much your city hall is worth. You're measuring how much do you need to raise in taxes and fees in order to continue your operations. Flow of financial resources, not flow of economic resources. Page 8 shows for each of those funds their revenues and expenditures and beginning and ending fund balances. And this is where Tim started out when he was talking. Take a look at general fund on page 8, and you see the revenues for 2024 came in at 3.9 million. Expenditures were 4.3 million. So in that year, you spent more than you brought in that year. Down below, you had fund balance beginning was $1.7 million. And so the drawdown that occurred during 2024 of the beginning fund balance was $385,000. It brought it down to the $1,353,000. That's how much you have left at the end of 2024. It's a hard number. And that's what he said was roughly 4 months of expenditures. It's about 35% of your revenues. So when we talk about what you want to do in your budgeting to make sure that you can continue to operate if some terrible event happened, like a fire or something, and wiped out a lot of your revenue or your tax base, you would still need to do a lot of things until such time as you had FEMA money coming in or insurance reimbursements or your tax base was rebuilt. You want to have money in the bank to make that happen without any delay. So you still have enough at the end of 24 to get through 4 months with no revenue coming in. It would replace about 4 months worth of that 3.9 million that had come in during that year. It's not a super long time. I generally say the smaller you are, the more susceptible you are to a catastrophe because of the limited area. So you want to have more months in a smaller town than you would need if it were Aurora. A tornado could take out 5% of Aurora, that might take out 100% of a small town. So you want to keep your eye on that in your budget process and make that bottom line be what you want it to be. The town has some policies on that about what the general fund's operating fund balance is hopefully going to be. And you want to make sure that you keep in line with that and plan for the future. That being said, it is normal to bring your fund balance up and down from year to year. If you don't just want it to keep building forever, then you're really overtaxing people. You need to have it at a sufficient level that you can operate in an emergency and have enough for those years when you have big expenses, even if it's not an emergency, like a lot of capital improvements. The second column there is the sales tax improvement fund. There's an example where you did have a lot of capital outlay. The biggest figure on that whole column is the $3,842,000 in capital outlay that you had during 2024. Now, this fund is a sales tax improvement fund. You had an election that allowed you to collect that sales tax. Whatever was said in that ballot question about how you can use that sales tax revenue has to be followed to the letter. And currently it's being used for those capital improvements, not for ongoing salaries or operations. Because of the nature of that, and the column to the right of that is the same way, 1% street sales tax fund, you expect to build this up to certain levels, then do projects and build it, draw it down. Then those sales taxes keep rolling in, you build it up again, and you can do more projects. But those two are special revenue funds with dedicated revenues. They have to be used for certain items only. In each of these first three columns, you see the third line up from the bottom, net change in fund balance was a minus. For the general fund, that's more concerning than the other two funds where you plan to use those sales taxes for the reason you got them, and that is to spend them on capital improvements. The next page where it says other funds is the amalgamation of two really small funds, which are shown on page 52 at the back of the book if you want to delve into those, but they're small numbers. It comes from the Conservation Trust Fund and the RAMP Fund. And again, those can only be used for the purposes for which those revenues are received by the city. We're going to move on to page 10. This is the proprietary funds statement of net position or balance sheet. It's exactly like the front of the book was because it's on that same basis of accounting for financial resources. So we've already talked about this. There was an internal balance here that under the wastewater fund that Tim had highlighted. It's about the fifth line down. It says internal balances minus $443,390. That was the amount of the advance from the sales tax improvement fund that had been given to the wastewater fund that was still owing at the end of 2024. It is not still owing anymore. It has been repaid. Back on page 6, under that sales tax improvement fund, the fifth item there, internal balances, shows a positive 443. So that's one fund or the other for that advance. And that's since gone away and been taken care of. Page 11 is where you really want to concentrate when you're working on budget. Page 8 and page 11 are where you want to take these figures from 24. They're the last final figures that you have going into the 2026 budget process. We know actually what 24 was. 25 is still in process. We don't know actually where it's going to end up. But so these are the final numbers on these pages 8 and 11. Page 11 for water fund shows the revenues coming in, the expenditures going out, including expenses for depreciation. That's the loss in value of these great capital assets that you have each year. And then you show the net income or loss, total other income or expense. Sorry, where's the operating? I'm sorry, operating income or loss in that bottom of that second section. As Tim said, your water fund had operating income of $181,000. Your wastewater fund had an operating loss of $73,000. And your parking fund had an operating income of $608,000. You generally want your revenues to cover your expenses when you're running a business. And so that's why that's a key number to look at. You might draw a line on that or an arrow because that's where you want to see if the rates are correct for running your operation. The wastewater amount of negative 73 isn't so dire because the depreciation expense, as Tim pointed out, of the 427,000 is not cash out the door. It's just a calculated expense of how your system is having this loss of its value. Down below, the next line item below, and it's the first one under other income or expense, is tax revenue. And that's where your sales taxes are going into these two funds, 480,000 into each fund. That props up your operating income or loss, and it wiped out the loss in wastewater. And then down near the bottom under contributed capital, you have intergovernmental revenue, 798,000. That is from grants for the water operations, for the water capital projects. So you've got good ending position in all of these funds. Parking continues to mount up because there's no significant expenditures yet. But when you get to building or buying more parking areas or structures, that net ending net position will go away pretty fast, the 1.7 million. Going forward, there's more information about the fiduciary fund. It really doesn't have much activity or much money in it for the Hanston Cemetery Trust. But starting on page 15 is the summary of accounting policies and the notes to financial statements. If you're interested in these types of things, you'll find this is very valuable. There's a lot of good information. If not, you can just skip through it, but I'll point out a few things. That is on page 19. It tells you how you depreciate those capital assets and what your years of depreciation are for the value of them. Going into page 22 shows how your cash and investments are divided up, and it shows how you keep your deposits and what type of financial institutions that you've got your money in. There's good information there. Page 23 shows what's allowed in Colorado for you to invest in. And you primarily use the sixth bullet there, local government investment pools. Those are your Colorado Trust and the C-Safe. These are pools that are allowed to be created just for municipal governments to put their money in and have it invested by professionals all together to get better yields than any of the individuals could probably get on their own. And so you've had good luck with both the Colorado Trust and the C-Safe over the years. Page 23 shows your capital assets and where the depreciation for those assets falls as far as what type, whether they're general government assets or public safety assets. And it also shows them by type: land, water rights, buildings, improvements, equipment, etc. So there's a lot of good information there. And you'll see it's right under the capital assets section on page 25 is the governmental ones. That's like the city hall and the streets. And then on the top of page 26 is the business type ones, and that's your water and wastewater and parking. They are separate. Pages 27 on show every outstanding debt that the city has. And there's a little blurb about each of the debt issuances. So look at page 28, for instance, is your 2018 street sales tax revenue bonds. That's the only debt you have from governmental activities, besides those compensated absences that people leave with their leave packages. But it shows you when the bonds were issued, what they were for, what the interest rates are, and what the future debt service payments to maturity are. So if you ever have any real questions about this, there's really already a lot of really good information in here about each of those. Bottom of page 28 for the water and wastewater and parking, there's a lot more activity. And so you can look at debt issuance by debt issuance at where you started, what your payments were, what's due within a year, how much interest is accrued at the end of the year that's payable in the next year, et cetera. And then again, on those following pages, each individual debt issuance is shown there, as well as any requirements regarding it. Like page 32, you have a rate maintenance covenant that you have agreed when you issue the debt that your revenues would be sufficient to cover your required debt service in the future at at 110%. Note 8 on page 33 goes into a lot of information about the retirement plan that you're a part of, the FPPA. It's the Fire and Police Pension Association. It's run by the state of Colorado. It's essentially a very well-run plan. It doesn't have any big concerns right now for you, but you are a member of that plan. And so any issues that it might have would be, you'd have your requisite share of liability for that. That's why it's in this, in your financial statement every year. And there's about 8 pages of required information about that plan. But in general, it's in good shape, and so are you. Other plans that the city offers, that's defined benefit, deferred compensation, statewide death and disability, et cetera, are all described in here because your employees are a large part of your financial operations, and these benefits, in both while they're employees and when they retire, are significant to the financial health of the city. Pages 41 and 42 talk about your required tax spending and debt limitation information. Down at the bottom of page 41, these are what we call the TABOR reserves, the Taxpayer Bill of Rights required emergency reserves for cities and towns. Have to have 3% of fiscal year spending set aside as reserves. Most of yours is in the general fund, but because your water and wastewater funds are not enterprise funds, they also have requirements here for emergency reserves. That's about it for the notes to the financial statement. The rest of the book is a little bit more detailed information. Starting on page 44, there's much more information about the pensions. There's some required information on page 48 about not only where you ended the year with expenditures, but how that compared to your budget. And you were in compliance with your budgets with all funds, so that's good, but this demonstrates it on pages 47 through 50 for your major funds. And then starting on page 51 is where other information is shown, including information for the 2 minor funds that I told you are not, they call them non-major rather than minor. But you have the RAMP fund and the Conservation Trust Fund that have dedicated revenue streams. You can only spend on the stated purposes. RAMP being for Colorado Boulevard and the Conservation Trust Funds being for park projects. And there's a budget to actual for these other funds in the back as well as for the water and wastewater funds and parking. And then you get to the very end, there's a required local highway finance report that shows just information about highway funding, street funding. You do receive highway user trust funds, and that's why you have to include this in the back of your audit. I know I went through a lot of information pretty fast, but I'm happy to answer your questions now. If you have any, or as I said earlier, any more in-depth ones you might want to go into at a later time. That's where you ended up for 2024.
Well, Lorraine, thank you, and you did great on time.
Oh, good.
So we've got a bunch of time. Does anyone have any questions for Lorraine? Right. Oh, yeah, Ed.
On page 28. It talks about here our revenue bond.
Yes.
And something happens in 2030 where we would have to pay this principal of 2,200,000.
Oh, yes.
What happens in 2030 that it jumps from like 370 to 2 million, 3 million, and then so on?
Good question. The requirement for these debt service schedules to maturity is that you list each of the next 5 years individually, and then you group them by 5-year groups after that. So you can see year by year what's coming up in the near future, and then 5-year increments after that. So that's 5 years worth.
So we would be able to divide that by 5 and get the actual amount for each year.
more or less, because it's
Okay.
not
Well,
even, it
each year
changes
it
slightly
increases.
each year. But yeah, that's 5 years worth.
That is interesting, yeah, because you're at 458 average.
Yeah, I about had a heart attack for a second.
See how the principal goes up each year from 25, 26, all the way to 29. And the interest goes down.
Yeah,
So it's not the same every year, but that's 5 years worth as opposed to 1 year's worth.
Well, the interest is going down too, and then the principal goes up.
Yep.
It's the same amount of payment. That makes
Yeah.
sense.
For a while, it's not exactly the same, but it's,
and that's where I was getting the 458 on the principal payoff.
Thank you.
All right, that was good. Catch. Anyone else?
Do you work with any places that budget for depreciation? And specifically the enterprise funds?
I have seen that done. I always recommend against it, since the budget has to do with what you appropriate as far as money out the door. And actually, these budget to actual in the very back of the book, see like pages 55, 56, and 57. Here they show the budgetary basis of the county where you're not listing depreciation, because you don't have to appropriate funds to pay it. It's not a payment. It's just a calculation. So it can be confusing when you act like you're going to spend the depreciation amount and you have to set aside money for it when you really aren't spending it.
I would concur with Lorraine. It's better to show the inflows and outflows. So if you've got a major capital improvement that you're doing 1 year, it's better to budget for, here's the loan proceeds, here's the grant proceeds, here's all the funding sources that we're going to bring in to demonstrate how we're going to pay for all of those costs that we're going to incur.
All right, very good. Any further questions for Tim or Lorraine? Well, thank you both very much. It's great having you. As always, very, very interesting.
You're
And
welcome.
we always learn several things.
Thank you, Mayor. Good night.
Thank you
everybody.
much. Have a good evening.
Thank you. Thank you both.
Okay, the next item up, with the family holidays just around the corner. I don't know about you guys, but normally we sit around and talk about howitzers, as many of you do. Now, you know, the way we do avalanche control up I-70 is with a World War II howitzer, firing charges off. And I was given a tour of the Eisenhower Tunnel, very recently. And they said they are going to give the howitzer back to the Army. And it's gonna be melted down for scrap metal. And I really think this is a horrible way to treat a very historic piece of Colorado history. And I don't think any of us really care if it ends up in Georgetown or Idaho Springs, but it was a very novel Colorado thing. And it's like 82 years old and has kept our, helped to keep our roadways open and our ski industry going. And I really think it's something that we should express an interest. I'm not talking about giving any money, but I'm saying rather than stand by and watch it get cut up and melted down for scrap metal, we should find a place somewhere here in the county to display it. And I would just like permission from council to pursue this, and it may be a case where the Army always owns it. And I don't think that is that big of an issue. It would just be on permanent display on Georgetown or Idaho Springs or something to that effect. I can't think of anywhere else in the country that ever had that. It's very unique. They even adopted special charges for it to shoot, to let these avalanche areas loose. So anyways, we'll start with Scott. What do you think?
Yeah.
That all right?
Pursue it.
Jeremy? Lisa?
As long as we're not putting out any money towards it.
No.
I don't wanna, I mean, we have budgetary issues that have to be addressed before we pick up, collectibles.
Sure. We're not talking about any money.
Okay.
Well, we've got 27 minutes. I can't believe it.
I actually have something I would like to bring up then, just because it's a work session. So, apparently in DRCOG, maybe a month ago, they were talking about the Henderson Mine is interested in working with local governments about replacing water lines. And I'm not sure if it's water or sewer or both.
Yeah, that was the stainless, presentation.
Yes.
I
and I've
was
talked-
on that one.
Okay, so I would like to ask that our administrators look into that for us, because I know there's a lot of people in this town that still have clay pipes. If there is some kind of way that we can have our neighbors at the mine help improve, water issues
Oh,
for our,
yeah. And the clay pipes are, of course, wastewater.
I don't know if it's possible, I just know if there's I think, we've all tried to be pretty good neighbors between us and the mine. And if they're interested in helping out communities like that, this is a good community for that.
Yeah, I would, ask, maybe if I could put Ed on the spot as well, because part of the pitch is that, like you may have, large areas with galvanized pipes that are really occluded. And if you gotta replace them, in fact, they have a very interesting study right here in America, with the Chrysler building. So it's been there 100 years, and they had gone in with stainless water lines. And to this day, there is absolutely no occlusion whatsoever. So it is, after 100 years of service, it could easily go another 100. So, part of the argument is that if they can be acquired at close to, an inferior material, yet, be the only line that you'll ever have to put in the ground for the next 100+ years, it's worth, the outlay. So that was, the gist of it. I think, the Henderson probably, would promote it. It's a good use of molybdenum. And, Ed, had you heard about anything about this?
Nothing.
Oh, okay.
I heard about it from two of the county commissioners. I heard about it from one who was on the DRCOG meeting. And then I went and ordered another one and they said, yeah, we've heard about that as well.
And there's been, European areas that have really embraced it and, have done, whole very large and medium-sized cities, as they've upgraded their stock. And they were talking about how good it is in, very frigid environment and, also again, just the purity of the water.
Well, I don't know if that's even a possibility for us, but I think I would like us to at least inquire, because I think it would help our residents.
Yeah, absolutely. Anything else?
Lisa, where can I find information on what exactly they wanna team up with?
I don't know. So the person to talk to would be Jody Harvin-Ball or maybe Merrick, because Jody's the one that told me about it. And she was at a DRCOG meeting. I saw her the day after she was at the DRCOG meeting. And this was maybe 3 weeks ago.
Okay.
It was the October DRCOG. Do you have any insight on that? Chuck?
Yeah, really the presentation was at, Henderson. They had a guest spokesperson. And there's as a lot of industry groups, like the American Plywood Association, they've got some front people to market and promote, in that case, plywood. So this was a stainless promoter in the industry. And again, I think Henderson probably had them as a guest because it is a clean way to go, much healthier than what a lot of our communities have. And it's a good use of molybdenum. So I think it was very appropriate for them. And I'm not sure if that's reported. It might be, but I'll look. And I'm sure I can put a feeler out to Haley, with the Henderson as far as, where you get that information.
Well, I mean, I don't know anything else about it, and I'm sorry. I just feel like if there's something that could benefit our community with our neighbors, it's worth it's worth half an hour of somebody's time.
Yeah, I agree. All right, anybody, anything else? All right, then, maybe we'll take 15 or 20 and, come back for our regular session at 7 p.m. Hey, and Diane's with us tonight.
Sure.
Cause, Wonder's off on vacation. So anyways, good to have you.
Thank you.
It's like riding a bike.
Nice to be here.
So you like Amy? More than we did.
What I did before, yeah.
Andy, do you all want this back?
Uh,
Are we already accepting these, Chuck?
No, we still gotta look into that. I'm sorry?
Are we already accepting these? I thought we had to wait.
I've got the times.
Okay.
We won't sign. I'd like to know the last minute.
I would too, all right.
Actually.
I have other, I have some.
And, please.
Thank you. You know.
I'd actually like to try to get someone.
Oh,
If you're replacing.
Don't moment, man.
No,
Yeah, kind of quick this,
Did you, you're at that for Saturday too?
5 years, they have no money on it.
No.
Okay, good.
Like,
I went by Saturday morning,
What they call
and I
it.
saw the big old hole and some cones there, and I didn't know if somebody had to work into Saturday to get the patch on, or now you're like patching a patch or what.
well, we kind of did.
That was a big old
There was
patch.
already a patch on there.
Yeah, I saw that in the photo.
And we took it off, put another one on, and then came back the next day and.
But they are not.
So we rearranged it. We were really not supposed to do that,
Oh, I thought it was a
But
long
we did it
discussion with somebody,
anyway.
and I was like, hey.
and it did work
insurance,
better,
I'll
but it's
do-
still leaking a little bit. But it should be good enough until
like certain individuals.
Are you-
we get in there and replace.
No, actually, no, it's just some.
She's one of them, but I'm like, hey.
See how it goes.
Everybody, please come on in.
Here, you gotta go in
Jimmy,
first,
how are
Scott.
I know, that's
Yeah, but it's just you and me, it's not Kate, so we
Okay.
don't have to, for Terrican now.
No,
I know, I've got all, no, I think, you know why, it's not doing that, it's like a deer in the headlight, and I'm thinking, hey, well, I think something.
Guy, is there an extra packet down there? I left mine on the table.
Nick, can you hear us?
Don't want to use connectors, like a plumbing connector.
Oh, I'm sorry. Never mind. I got it.
Okay.
I finally got Rolanda out there today.
Still doing it. There's one, I don't know.
No, I'm good.
Thank God I have a furnace, thank God I have a stove,
Yeah.
a fire like a wood stove.
Well, I would like to welcome everybody to the November 10th, 2025 City of Idaho Springs regular council meeting. We'll call to order right at 7 p.m. I'd like to start off with roll call, please.
Jean Mariani, Jim Clark,
Here.
Kate Collier, Scott Pennell.
Here.
Lisa Manifold. Here. Mayor Pro Tem Jeremy Jones,
Here.
Mayor Chuck Harmon.
Here, all please rise for the pledge of allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you. Please be seated. We have an agenda before us tonight. Do I have a motion?
Make a motion to approve the agenda. I'll second.
Thank you, Jeremy, and thank you, Scott. Any discussion of the agenda? Hearing none, all in favor, please raise your right hand and signify by saying aye. Aye. Any opposed? Does anyone tonight feel they have a conflict of interest?
I have in the bills, I have a bill in the, so I'll just use myself.
Okay, all right, that sounds good. Cause we still have a quorum. Next up is approval of the minutes. Do I have a motion?
Motion to approve the minutes from October 27th, 20.
Thank you, Jeremy. Do I have a second?
Second.
Thank you, Jim. And any discussion of the minutes? And hearing none, all those in favor, please raise your right hand and signify by saying aye. Aye. Any opposed? We have bills before us tonight. Do I have a motion on the approval of the bills?
Make a motion to approve the bills through November 10th, 2025.
Thank you, Jeremy. And do I have a second?
I'll second.
A second from Lisa.
Minus Scott.
Let's try minus the car wash.
Minus car wash.
Well,
I'm just gonna.
well, he's gonna
recuse from the
recuse, so
whole thing.
we'll still have a quorum.
Cool. Sweet. Perfect.
Oh, yeah, gotcha.
But it is noted that Scott has recused himself from the vote. And any discussion of the bills? Hearing none, roll call, please.
Jean Mariani, Jim Clark,
Yes.
Kate Collier, Scott Pennell. Lisa Manifold.
Yes.
Mayor Pro Tem Jeremy Jones,
Yes.
Mayor Chuck Harmon.
Yes. All right. Next up is public comment. And I'd just like to check, do we have anybody online? Dylan?
No, I don't see anyone online.
Okay, well, thank you. David Michael from Agati, welcome. It's good to have you with us tonight. in public comment, you have 3 minutes, and we don't usually have any back and forth. It's our time to listen to what you have to say, and please come on up, and we're glad to have you.
Thank you. I welcome you back and forth as well. Good evening.
You can state your name and address for the record, please.
Yes, David Michael, the address is, Scott, help me out, I'm just blanking on the number.
Well, they want your home
Oh, the
address,
home
right?
address?
Yeah.
100 Iron Horse Way, Winter Park, Colorado, 80482. And I'm here representing my company, Agati Limited. We are tenants at the building over on 2820 Colorado Boulevard. And I'm here to speak about the parking. I'd like to first apologize to this board that I am bringing this up. I know that there was notice given to my manager that there would be metered parking there. And that's what I'd like to discuss. We did not engage while council was looking at the parking. That manager has been terminated. We had a number of performance issues due to his own personal issues. And while he was contacted by the city, it did not go from him up to our senior management or central management. And we have stores all over the state, and it was not, we didn't know that the parking was could be metered until it was. And for that, for my organizational failure, I do apologize that I'm asking the city council to revisit this issue. There are 13 parking spots in total in front of Belton Moonshine Liquors and the Gotti dispensary, and those parking spots are now metered as of, I believe, October 1st. Is that when it started? It's roughly around then.
Yes.
And in that time, we have had a number of customer complaints about parking, that is now metered parking. And we have seen a drop year over year of $10,000. I can give you the exact number, it's like 9,700 for the month of October. I spoke with the mayor. We did put out some parking that's at 15-minute parking for customers only. And that was towards the end of the month, so it wasn't even the whole month. Also, it was the first month, so while I understand that it was $9,700, we do expect that to snowball during the winter and summer as people start realizing that they have to pay for parking to come and be patrons at our store. And that is going to affect us, and I think that the amount will continue to rise. Also, October is not that busy of a time, and we do see much more traffic during the winter and the summer, so that $9,700 could go up dramatically during that time period. When we have more people there during the winter and the summer, and also as people stop coming there, if they feel as though they have to pay for the parking, for the privilege to shop at both the liquor store and the marijuana dispensary that's there. May I continue?
I would just ask to please wrap it up. We try to keep to 3 minutes.
I'll be quick. That would be at 15.5%. Approximately $1,500 of lost sales taxes. That will be higher. That's just for 1 month in the first month. And we do predict that there could be a loss annually in terms of sales taxes of upwards of $30,000 for the city, and potentially even higher. So what I request is if we could not have the 13 spots in front of our store be metered, but rather, since there is a parking issue that we did see over the summer with bikers there, have parking signs for either minimum 20 minutes, maximum of 30 minutes, that for customers of Mountain Moonshine Liquors and Agati, as well as for valid permit holders can obviously park there as well. And my staff will monitor that. And then anybody who's exceeding that time we certainly call it in, let the city know for ticketing purposes, because we want to make sure those spots are open and available to our customers. Our peak time, we typically we'll have at max about 10 cars there from customers at a time. That's just for our store, not for the liquor store. The sales tax numbers that I'm discussing are only the effect that it would have on dispensary, not for the liquor store as well. And I would ask that the council consider putting just timed parking there as opposed to paid parking for our customers. Thank you very much, and I'm happy to answer any questions.
Yes, we don't have the back and forth, but David, Michael, thank you very much. You know, we really appreciate folks coming in, giving of their evening. It's never easy coming up and speaking to council. And I just want to thank you for putting yourself out there and expressing that to council. I'm sure we will be talking about that at an upcoming work session.
I'm grateful for the opportunity, and if it is going to be anything that is scheduled, in terms of being on the agenda, I thought it would be when I sent in the request. I didn't realize that it was going to be public comment, but I'd love to have a back and forth dialogue and discuss potential solutions.
Well, thank you very much, sir. I appreciate you coming in.
Thank you so much.
Next steps is we've already had our finance officer, no resolutions tonight or first readings. City Attorney Nick, good to see you. Thank you for being with us tonight.
Hi, Mayor. Good to see you.
Anything for regular session?
No, sir.
Okay. All right. Then we'll move right along to City Administrator. Andy, no request for action tonight, but I wanted to see if you had anything further to share with us.
Nothing further, just a reminder that we will have a work session next Monday to talk about the updated proposed 2026 budget.
Yes.
And that'll start at 5:30.
Yes.
Just a work session.
Very important meeting coming up here on the 17th. All right.
If I may, Mayor, Andy, what would you say the top thing that you gained from your debrief with US DOT about why we didn't get the raise grant?
There were no awards in Colorado, as I recall. There was, it was the end of the funding period for that grant program. So this was kind of the last year for that cycle. So there weren't a lot of funds to go around. And I think there were like a dozen, 10 or 12 programs throughout the country that were awarded. So it was extremely competitive. Is there anything else?
I would say the thing that I got most from it, it was extremely competitive, and the numbers game, we weren't even close. We got good reviews on our application, which I was very happy with. Just a gazillion people with their hands up.
Wow. So are we applying for it next year?
Well, we've been talking with HDR Engineering, our project consultant for Mobility Hub. And they're thinking with the changes in administration and with the changes in priorities, they're thinking our chances are pretty slim for next year. So I would say we've made that final decision not to reapply, but they're thinking our chances.
You need to look at ROI for the amount of effort that
Correct.
is put into the grant.
Correct. So I would say it's been finally decided. In fact, we have a meeting coming up with HDR to talk about next steps. But their initial analysis is, and they do a lot of grant work as well. They're thinking it probably doesn't make sense for us to apply. We might want to think about different options, which we are doing.
Fair enough. I did have one other question for you. When are they thinking about closing Mountain Park for the sheep?
We did meet with CPW staff. And right now it's tentatively December 1st, but they also agreed to consider a couple modifications. One is that if later this month it's deemed that the park could stay open a little bit later into December, that could happen. So we appreciated them being a little flexible there, depending upon what they're seeing with the sheep population.
Mm-hmm.
The other item that just needs to be finalized, but it looks like they were amenable to, was having the upper part of Virginia Canyon Mountain Park stay open. Most of the sheep impact is on the lower part of the Virginia Canyon Mountain Park with the rock outcroppings there. So the park would be, the trails would be closed at the hub, which is known as a hub. And then people could go from the top to the hub, and then they would exit out onto Virginia Canyon Road. So through those winter months, December, January, February, and March, those upper trails could be used. So that still has to be finalized, but after taking a look at some of the pictures from the videos that we had set up on the trails, both looking for people that were up there that maybe shouldn't be or doing things they shouldn't be doing, but also looking at what's going on with the sheep population, other animals. It was talking with CPW, they seemed open to that idea of keeping the top part open for hiking and biking.
Okay, thank you.
You're welcome.
And if that's biking, the only access is through the gondola then, because you can't, can you enter off of Virginia?
You could access off Virginia Canyon Road.
You have that emergency access trail.
Yes, that's uphill and downhill biking, am I right?
Yeah, it's multi-directional
Okay.
for all users.
Now, one thing we do need to think about
The
is,
traffic on Virginia Canyon, would that be a?
well, that and also parking. And
Yes.
do we, the county does not allow parking on county roads. But the section of Virginia Canyon Road that's in the city, which is most of Virginia Canyon Road going up to that access trail there. We may want to take a look at whether we can allow parking on one side of the road safely or not. But that definitely could be one of the challenges is if it's just the upper part of the mountain, where are people, you're right, they either have to be the gondola, or if they're driving up, is there a place where they can park safely or not? So I think we might want to take a look at that.
If we, I'm sorry, if we didn't have the bikers, would we, it seemed like we might want to adapt the parking. Would it make sense to have paid parking on the east end of town if we're not having the bike traffic? I don't know.
But also, we might need to
There's a lot
talk
of-
to,
A lot of
I don't
variances
think
to,
so, but yeah.
there's a lot of variances to this parking issue. I mean, there's just so many offshoots.
we also might need to talk to the people that live on Virginia Canyon Road, because they already feel the pinch of people moving up and down that road.
Well, just the traffic.
Yeah, there's a
you're saying,
higher,
yeah.
like the traffic flow has increased.
Is that, help me out on the city limits on VGC where,
Just try the access road. It's like
but
50, 60 feet before you get to the actual access road.
on, so after the pavement ends, take a right and it's,
Now you go up and around, what's the 1 mile marker?
Okay.
I want to get in, that's where it's actually at.
Okay.
Where that new trail comes in, that's approximately where the city limit is. It's just north of there is where the city limit is.
And where's the bike path access at?
right there.
It's right there.
Just north of there. is where the city
So
limit is.
I just didn't know what the
Safety
limits
concerns
were.
of how much bike traffic and all that, you know?
And well, especially since it's county maintained and road, even though it's in the city limits, they, like Andy said, the parking, et cetera. But the confusing part is when the county had made offers to residents on, even on the paved part to, if they wanted to be annexed into the county and not the city. Years ago, I didn't know if that affected the city limits on Virginia Canyon.
And even if that bike path and hiking is available in those months, cold months, we might not see a high degree of use on it.
Yeah, I can't
It could be
imagine,
low
so,
use. I mean,
yeah,
there's a few nice days mixed in there, but
few and far between with snowfall.
there's gonna be a lot
et
of
cetera.
cold days too.
Yep. Okay.
Well, we
Something to bring
certainly
up.
can take a look. I happened to notice the other morning, it was 19 degrees.
Oh, good, yes.
And I couldn't believe how many people were accessing the bike park.
Yeah.
Jeez. I actually
They're
went all,
sweating and they're wearing appropriate.
I
clothing.
went all the way down to the roundabout just to marvel at all of the number, and it was early, like 8:15 in the morning. And I turned around just to come all the way back down and I was counting heads and I was shocked. It was that cold. Well, I wouldn't do it, but anyways, yeah, we'll have to watch this kind of a novel experiment being this cold,
Yeah.
you know,
Because it wasn't open last year at all.
No,
yeah.
well, wait till snowball hits them too, that'll make a big difference.
All right, next up, Guy, got your report. Anything further to share with us tonight?
Nope.
And, Dylan, thank you again for your report. Another good one. Anything further to share with us tonight?
Nothing with me, thank you.
All right. And, let's see here. Diane, thank you very much for coming in for Wonder. I also need to take a minute. This is Diane's last official act after a quarter of a century, 25 years of, yep. 25 years of service, to the city.
Well,
And I will say, since nobody ran, for the office, Diane has graciously, said that she would be willing to, put her hat in the ring for an appointment. So that is with all of the experience that she has.
What?
That is a very, very
Just can't give
kind
it up.
gesture. Yes, I know. Yeah, so
Absolutely.
anyways, want to say a huge thank you on behalf of the city.
Thank you.
Absolutely.
Chief is not with us tonight, but, we do have his staff report and, there has been a lot of, vehicle crashes, what, 3 in 6 weeks or something like
4.
that? Oh, boy. Okay.
Yeah, or
There is a motion to approve 2 vehicles, and as you saw in his report, we can save a few thousand by accepting a 2025 instead of holding out for a 2026 model year. I put it up for council. Do I have a motion on this one?
Make a motion to approve the purchase of 2 2025 Ford Explorers in the amount of $102,354.40 from the Port of Denver. Coming from line item 21-00-6012.
Thank you, Jeremy. And do I have a second?
I'll second.
Second from Lisa. And any discussion?
This is from our approvals in 2021, correct?
3, I thought.
Yeah, Jimmy, I think it may be 2023. And as you saw, the one vehicle that they were gonna fix, it was gonna be very expensive. They decided to total. So we're getting 40-some thousand from the insurance company, and we are going to repurpose the lights and other equipment off the wrecked vehicle to save some dough.
That was my question, because
Yeah.
These are police interceptors, they're in stock.
yeah,
So long have in stock.
Right.
That's what makes this nice, so that they were able to call down and say, what do you have? And make a very reasonable deal with them, because they're already, they're on account, they're on.
they're not just
Dedicated
regular.
for
yeah.
everybody else, they're exactly
It's
what they need,
cheaper
they're
than
ready for
what we-
upfit, and they were on their lot, so.
And
And this is minus outfitted, just the vehicle, correct?
yes,
But we're repurposing.
for, yeah, at least one. And I wish Chief was here, we could ask, but it may end up being more than one.
Yeah,
And what Jeremy was saying about
yeah,
these being ready and on the lot. Because in 2023, you'll remember there was like a 2-year wait
Yeah.
for the cars.
yeah.
So.
The only concern would be losing a year's worth of warranty, I guess, on it being a,
Well, I think it's from time of sale.
Time of sale.
oh, it is.
So
Not
time of
model
sale,
year?
No, time of
Okay,
sale, so time
cool.
to take receipt of the vehicle, so nothing changes.
So it'll still come with factory, whatever warranty, if it was
Yeah.
26 or not.
I think it's like 3 or 36 for.
Yeah,
for
or
these
or
because of how they get
550,
used,
what,
yeah.
yep, okay.
Yep.
Well, then that's cool. I think that's a good idea.
All right, any further discussion?
Mayor, I might add that the firm that does the outfitting of the vehicles, decommissions the vehicle and puts the equipment back in the new vehicle. They're really backed up but they understand that we have one vehicle that we're down. So they're gonna get that in the upcoming weeks.
Wow.
The other vehicle, they're gonna put in their schedule to do about midway through next year. So
Yeah.
although we will take possession of that second new vehicle, it's a replacement of an operating vehicle that needs to be replaced, but it's still operating.
Right.
And then that will be
Yeah.
outfitted probably about mid-year next year because they're so busy. So, and the chief was fine with that because that meets the needs of getting the wrecked car, getting that new car back on the road and then replacing the other vehicle at a little bit lower cost that we were planning to do next year, get that vehicle, but now we're getting it this year rather than putting the budget for next
Seems
year.
normal cycle.
Yeah.
Anyway, yeah.
Well, good point. Thank you, Andy. And with that, if there's no further discussion, roll call, please.
Jean Mariani, Jim Clark,
Yes.
Kay Collier, Scott Canal,
Yes.
Lisa Manifold,
Yes.
Mayor Pro Tem Jeremy Jones,
Yes.
Mayor Chuck Harmon.
Yes. Well, Ed was busy as usual with his crew. We had another main line break on 103. A mere, what, Ed, a foot away or something like that from another break?
There's three of them over there.
Hmm.
And they're all, 30, 50 feet apart from each other.
But I saw a photo when they dug it up. They were digging it up almost dead centered with another big patch.
Which none of us even knew was there.
But a big thank you, once again. And Ed, we have your, staff report. And, we also have a motion here, because we've had a leaking problem over at the visitor center for quite some time on the roof, and Ed got an estimate for repair, because I don't know, maybe some of you heard, we had an earlier estimate for a roof replacement, and it was something crazy like $400,000.
I think more.
Yeah, yeah, so, anyways, this would probably at least buy us some time. And with that, I would ask for a motion.
I'll move to approve the visitor center roof repairs quote from Roof Tech Restorations for $14,500 from line item number 10-51-2130.
Thank you, Scott. Do I have a second?
I'll second.
Second from Lisa. And any discussion?
Ed, do you feel good about this estimate and the,
I do.
assessment?
I think it's quite fair and I like the guy. He seems like a stand-up guy.
But like, do you think it's gonna really address, because that has been, what is it,
Well,
like 3 or
not-
4 years?
He also,
Yeah.
did I include the second page? He's gonna come back a couple of times just to make sure that it took. And then maybe do some additional sealing,
Okay.
to make sure that it seals up. But we may not know until
Get a big snow.
we get water on the roof. But it's been a thing for
5 years.
several years. Yeah, Willie's been up there every year for the past 5,
Mm-hmm.
trying to seal up something. And it's elusive and difficult.
All right, any further discussion? Hearing none, roll call, please.
Jean Mariani, Jim Clark,
Yes.
Kay Collier, Scott Canal,
Yes.
Lisa Manifold,
Yes.
Mayor Pro Tem Jeremy Jones,
Yes.
Mayor Chuck Harmon.
Yes. Under clerk and treasurer, Diane, anything to share with us tonight?
No, just wanted to thank everybody for their lovely comments.
All right.
Maybe it will continue.
And Ed, I'm sorry, before we move on to mayor and council, I just want to see if you had anything further to share with us tonight.
I don't.
Okay. All right, well, thank you.
Thanks, Ed.
And under mayor and council, trying to think, I don't think I have anything tonight. Does anyone on council have anything before we move into executive session?
Oh, they're not now.
City offices will be closed tomorrow.
Oh, yeah, thank you. That's very important. Yep. So office be closed tomorrow. All right, then, I'm gonna make a motion here, to go into executive session. And, we will be coming out of executive session and also adjourning the regular session at that, time. I'm gonna make a motion that we go into executive session under CRS 24-6-402, parentheses 4, parentheses A, parentheses B, and parentheses E, to discuss matters that may be subject to negotiation and receive legal advice concerning the city's recent real estate transactions in and around Virginia Canyon Mountain Park. And do I have a second?
I'll second.
Second from Lisa. And any discussion? Hearing none, all those in favor, please raise your right hand and signify by saying aye. Aye. Any opposed? All right. Then, Nick's good to have you. Hey, are you also feeling under the weather?
We'll need to.
No, I'm not. I was sick a couple weeks ago, so maybe it's just going around.
Yeah.
I'll see you on the other side here. I'm logging into the other link.